Hey everyone, my name is Michael Valtos, and I'm a 20-year institutional futures trading veteran, and today I'm going to explain order flow, hopefully in a way that you can understand it and apply it to your trading relatively soon. I'm not a big believer that it takes 10,000 screen hours to learn how to trade. Honestly, 10,000 screen hours is 5 years of your life, and no job is going to give you 5 years to learn how to do your job. And if you're serious about trading, you should really consider order flow in your trading. So my goal for this webinar today is to improve your trading discipline with order flow. I'm going to talk about a top mistake traders make and how to avoid it, how order flow will keep you on the right side of the market, and hopefully you can discover a trading edge that can make you a consistently better trader by using order flow. And if you stick around until the end, I'm going to show you how to get my book. I wrote a book, 150-page book on trading order flow, and it discusses, basically everything. I'll say everything, most everything you need to know about trading with order flow. And there's a few trading strategies in there. So before I get started, for those that don't know me, my name is Michael Valtos, and I've spent 20 years trading. When I was putting together, I didn't realize I wrote this headline like, 20-year futures trader. I hope people didn't think I'm some 20-year-old futures trader. No, I've been trading futures for well over 20 years actually. And I started my career on the CME floor back when there was a trading floor back in the early 90s. And I literally started at the bottom. I worked my way up as a runner. Eventually, I left the trading floor when Globex was starting to take off. Electronic trading was, the future. Being at that time, being in my 20s, I realized the future is going to be computers. So, I left the floor and I started working for Dean Witter. Then I joined EDF Man a few years later. Then Commerce Bank. I became a licensed Eurex trader at Commerce Bank. I spent 4 years at Cargill as a trading desk manager, and most recently, before I started Orderflows, I spent 8 years as a vice president of futures trading at JP Morgan. Now again, this is a picture of myself and my family. I'm not the guy dressed up as Mickey Mouse. I'm the one with the arrow holding my son. And I put this picture there so people can realize what trading can do for you. It can give you freedom. We all want freedom. We all want freedom from our our jobs or whatever. We want to be able to do things. You want to be able to travel with your family and enjoy life. In 2013, just a little backstory about me. 2013, I left JP Morgan, and my daughter was born about 3 months before. And honestly, everyone thinks, wow, JP Morgan is such a great place. It sucked, honestly. I would go in the office at 5 in the morning. I would leave at 5 at night, and I was spending more time with my coworkers than my wife. And with the birth of our first daughter, I realized, I got to make a change. And I left JP Morgan, and I just wanted to enjoy life. And then I started writing a book on order flow, and I was still trading for myself. But I realized, the order flow software out there didn't do what I wanted it to do. And I hooked up with the programmer, and in 2015 we released the Orderflows trader on orderflows.com. But before we begin, just a brief disclaimer: this presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Why do I say this disclaimer? I want people to understand there is risk involved. Sometimes I get people coming to me, it's like they are on a race against time that, they're like, oh, I want to start trading. I don't know if I should go to work or not. If I could make a success at trading, then I won't go to work. That's the wrong attitude to take. You have to come into it with open eyes. It's not a race against time. It's it's a marathon, right? And you want to be around doing it for a long time, not just looking for a quick holy grail, so to speak. So over the years, I've done a lot of things right in trading, but also I've done a lot of things wrong. And after trading for well over 20 years, I've discovered some truths. The market's going to do what it wants to do, and no matter how much I fight it Or, I could sit here and put my hands together and pray. Markets, oh, don't do that. The market's going to do what it wants to do. I have no control over it. The best I could do is to get on and enjoy the ride with the market when it makes a move. Nothing is 100% in trading. You could have the best indicator, the best trade setup, all the planets aligned in outer space. And then you enter a position, you get long, and then there's some guy at Credit Suisse, all of a sudden, boom, he wants to sell 5,000 contracts at V-minis. Nothing you could do about that. So nothing is 100% guaranteed. And being successful at trading takes work. It's not easy. There are very few people that really take to trading like a fish to water. Prodigies. Like I was watching TV. There's a little 5-year-old kid just sits down and starts playing Beethoven at the piano. There are people that come to trading that are like that, but it's very, very rare, right? It takes work, it takes discipline. Even Tiger Woods. Everyone says, well, Tiger Woods was a golf prodigy. His father had him out there at the age of 3 practicing for how many hours a day every day. So it's not like he just took it up naturally. He worked at it from a very young age. And trading is the same. It takes work. And I discovered this the hard way. That trading takes work. Honestly, when I came into the markets, I thought, hey, it was great, and it was very easy. I grew up outside of Chicago. I had a lot of friends in school whose parents, were members of Board of Trade and CME, and I thought trading was easy. You just show it up, and and money comes into your pockets. It's not. It actually took work. And with this presentation today, hopefully I'm going to show you a way, to get up to speed with trading order flow the easy way. I don't want to say to cheat, but sort of jump the queue by learning it and understanding it. So what is the hard way of learning order flow? Well, devote years of your life trying to figure out what makes the market moves. And you could waste money on the latest shiny trading object, the holy grail. But I got news for you. You could spend money on a holy grail trading system today, and next month there's going to be a new and better one. You're better off just learning how to trade. Or the worst case scenario is blowing out a trading account, and then after a trading account, I know a lot of people, if they somehow think that, to be successful you got to blow out your trading account several times. You don't, right? You just learn how to do it correctly, learn how to trade correctly, and understand the markets, and you won't blow out your trading account. It's the way I liken that last one to blowing out your trading account. It's like the people that go to Las Vegas and say, I got $10,000, and if I lose it this weekend, that's fine. It's entertainment for me. Honestly, for me, I don't like to lose, right? I got a lot of other things I'd rather spend $10,000 on than entertainment at a casino. Honestly, I went to Vegas last time I was there about 15 years ago. I didn't even gamble. Well, I take that back. I gambled, but I just paid the penny slots, for 1 penny, literally the minimum that you could do, because I get no excitement from standing around a craps table, all that excitement. That's not, to me, that's not excitement. I just go there, watch Wayne Newton, and I eat a lot. But let me ask you, would you like to get the easy way to achieve trading success? I mean, we all would, right? And in the past 20 years, I've like to believe that I've achieved above average success, right? You don't last 8 years at JP Morgan unless you're good at what you're doing, right? I mean, if you're not bringing in money to the bank, then they're going to cut you loose, like it or not. You could be the nicest guy in the world, but if you're not producing for the bank, they're not going to keep you around. So I like to think I've had above average success. I don't want to say brag I'm the best trader in the world. No, I'm not. I know a lot of guys that are excellent traders, and some of them are better than me, but I like to believe I be humble and above average success. I didn't go through a lot of the problems most traders face. I was very fortunate. Back when I was on the floor, you had access to all the traders there that you could talk to, and people to meet. It was a great time, and unfortunately, that time doesn't exist anymore. There's no more trading floors that someone could just go down there and beg someone for a job and get started that way. You can't. Nowadays, to get a job in the futures industry, you really, if you're trying to go join a prop firm or a hedge fund, you got to have, a certain background. You got to have a certain degree. And if you don't meet those requirements, they're not even going to get you in for an interview. And so it's harder for traders. It's hard for people to get started in the trading industry, and it's kind of scary. Now, results will vary for everyone. Okay, no one is going to have the exact same. If you put 5 people in a room, each person is going to have different results. Why? Because some people are going to be more serious about it than others. Some are going to have more time to spend. Some are going to understand it better than others. And I just want you to know that results are not going to be the same for everybody. I mean, you may have 1 hour a day to spend on it. The next person may have 3 hours a day, and and some people may understand things better than others. So to say everybody's results are going to be the same is a lie. So I'm just putting it out there. I just got to keep it real. If it turns people off, I'm sorry, but that's the God's honest truth. Now, before we get started, I just want to go over some basic building blocks with order flow and understanding order flow. There are 3 things, the 3 basic tenets of order flow. Delta, which is the difference between aggressive buyers and aggressive sellers in the market. Okay, I'll get to that in a minute. Bar point of control is the level in the bar with the most volume. And when you have the most volume in a bar, that's the area, the value area technically of that bar. Then you have imbalances, which are price levels in a bar where aggressive traders appear. And again, why is that important? Because if you have a price level where you have aggressive buyers or aggressive sellers, that's going to be important to note because over the course of trading, if the buying or selling reappears, it's an important level. Now, everyone always, trading is a zero-sum game. They'll say, for every buyer, there's a seller, okay? But there are different types of buyers and sellers in the market, and you have to understand that, right? You have aggressive buyers, you have aggressive sellers. You have passive buyers, you have passive sellers. And aggressive buyers buy from passive sellers. Aggressive sellers sell to passive buyers. And really what you want to look at is you want to follow, or not follow, but you want to notice, you want to know what the aggressive traders are doing in general. Why is that important? It's because that's what moves the market, okay? When people are passive, people are sitting on the bid or sitting on the offer, they're letting the market come to them, right? But if you're aggressive, you're selling at the market, you're selling into the bid. If you're an aggressive seller, if you're an aggressive buyer, you're buying the offer. That means you expect the market to move sooner rather than later. And that's what moves the market, is the aggressive buyers and the aggressive sellers. Passive buyers and passive sellers are traders that are letting the market come to them. They take a risk, they may not get filled on their order. Okay, but aggressive buyers and aggressive sellers want to get into the position and they want to get in now. And that's going to be very important when you're understanding the market. So this is an order flow chart, and to a lot of people, it's a bit scary. At first glance, they think, oh God, so many numbers here, what am I going to do? And honestly, it's a bit intimidating. Numbers scare people, right? And it goes back to high school math. Everyone, the majority of people I know hated my high school math, myself included. And when you see numbers, you think of taxes as well, and everyone hates paying taxes. But again, there's several things that really you got to key in on. And the first one is delta, which is the number that runs along the bottom here. This is the Orderflows software, the Orderflow Trader software, which we developed. I developed with another programmer, and this is how it looks. And so delta is the difference between net aggressive buyers and net aggressive sellers. And why is that important? It's because when the market moves up, it's driven by demand. When the market moves down, it's driven by supply. And the market moving up, you should have positive delta. You should have net aggressive buying. If the market's moving down, it should have net aggressive selling. It should have negative delta, okay? Bar point of control is indicated in the bar with the rectangle around it. That's the point in the bar with the most volume. And why is that important? Well, because that's the value area in the bar, right? You'll notice as the market's moving, it often retraces right back up around that level, within it, right? Sometimes it's right to the tick, sometimes it's within 2 ticks, sometimes it overshoots it by 1 tick, but it comes back right around that level most often, more often than not. And that's an important level to watch. Now, imbalances in the bar are the numbers. Selling imbalance is red, right? A buying imbalance is blue. And what that indicates is, when the market's the market's always bid and offer. It's a two-way auction, right? You have a bidder, you have a buyer, you have a seller. Someone's bidding, someone's offering, and you're doing a diagonal comparison, right? So say the market's 6 bid at 7, and when you have more than a certain percentage, you can adjust it, but generally the rule of thumb is if you've got 4 times as much buying on the offer than selling against the bid, that's a buying imbalance. If you got 4 times as much selling into the bid than people buying aggressively from the offer, that's a selling imbalance. And again, you'll notice on moves up, you'll generally have buying imbalances, like you see here coming up off this low. And off this high, you have mostly selling imbalances. You do have 1 or 2 buying imbalances on the way down, but it's mostly selling imbalances, right? So the aggressive sellers are in control just by seeing the selling imbalances. They're in control by watching the delta. Okay, so that's some of the things that order flow gives you. And again, if you're just looking at a normal bar chart, you're not getting that information, and it's available to you. And if you're not looking at it, I mean, why aren't you looking at it? It's there. Use it. It boggles my mind. Most people that I've dealt with, when they use bar charts, right? But then when I explain to them how to use an order flows chart, they never want to go back to a bar chart because they're thinking, my gosh, how did I trade all this time without using this information? I mean, it's so, it's so basic, to want to know this information. I mean, it'd be like playing cards, right? I mean, the last speaker talking about playing poker. It's like playing poker, but being able to see, everyone else's cards. You can see where people are being aggressive. You can see, where markets are turning, and it's going from net selling to net buying. You can see that information. So, let me tell you how order flow will help you achieve trading success. It'll improve your trading discipline. It'll help you avoid top trading mistakes. It'll keep you on the right side of the market, and it'll give you an edge over other traders. So, number one, order flow will improve your trading discipline. So, what do I mean? Well, again, one of the top reasons, what is one of the top reasons why traders fail? Let me ask you that. It's because they have no discipline in their trading. There's a lot of reasons, but the top one, most people are not disciplined in trading. And, I see it time and again. I've mentored a lot of traders, and sometimes they come in, they've just got no discipline, and it's hard to be successful at anything in life. Don't even think about trading. It's hard to be successful in doing anything unless you have discipline, right? You have to be disciplined in what you're doing. And in trading especially, anytime there's money on the line, you got to be serious, and you got to be focused. And what do I mean by they lack discipline is they take trades they shouldn't take. Here's a perfect example. This is yesterday in the crude oil. Okay, we were coming down, about 10:20 in the morning. We started making new lows. Point one, do you buy? It's a question mark. Anytime you're coming into a low or going into a high, you should be asking yourself, is this market going lower, or is it going to go and rally? If we're coming into a low, are we going to go lower, or are we going to bounce here and start moving higher? Those are the questions you should be asking. I'm not asking you to pick highs or lows. That's not what order flow is about, but it's about letting the market tell you it's time to take a trade. So, first time you come into the low, should you buy? There's no reason to be buying here on the order flow. Second time you hit a new low here, a little bit later, is there a reason to buy? No, there's not. The third time, well, initially no, but now you're starting to see things in the order flow coming in that's telling you, hey, it's time to buy. The market is giving you this information, and you can just see it here, right? You can see how the delta is increasing. This blue thing is the delta scuff. I'll talk about that later. It's just a tool to analyze the delta. But you can see how the delta is really gotten strong here. It's 927. Prior is mostly kind of smallish numbers, 123, 275, 148, 300, 193, then boom, positive 927. That's very strong buying coming in. Then in the next bar, you got what's called a stacked imbalance, which is 3 buying imbalances, one stacked on top of each other, again, which is also a bullish sign. So you have the market giving you, telling you, hey, now's the time to buy. You have signs in the delta that aggressive buying is coming in. You got signs with the imbalances that aggressive buying is coming in. So how did the trade work out? This is that imbalance that you just saw here in the previous chart right here. You can see it here. This is the 49.90 area, and over the next hour, it rallies all the way up, to the 50.20, even a little bit higher. So that's giving you, a nice 30-cent trade. You know, the market's rewarding you for being disciplined, for being patient and waiting for the, you know, the right opportunity to come along and take the trade, as opposed to just saying, oh, you know what, we hit this low, you know, it's a green candle, we're starting to rally, I should buy. Or this one, you know, I mean, some of these candlestick guys will say, oh, you know, you got this, you know, it's almost a Pinocchio bar, a pin bar, or a hammer, you should be buying. But then you still make a new low, and then you rally. Then they'll say, well, you got the same type of bar here, you should buy anyway. But why should you take this trade? Why should you take this trade? There's no reason to be buying there. But if you're using order flow, you can understand what's happening in the market. Number two, order flow will help you avoid the same mistake other traders make. And there are many mistakes traders make, actually, but the one I see over and over is poor risk management. What do I mean by poor risk management? Is their stops are too wide. And, you know, ask yourself, what if you can tighten your stop placement? What if you could save one tick on each trade with better stop placements? Okay, say you take 1,000 trades a year, okay, and you know, keep the math simple. Say you you know, have a 40% win rate, and so that means 60% of your trades are losers. So you have 600 losing trades. If you can reduce your loss by one tick on each trade, what's that worth, right? Say you're trading crude oil, $10 a tick, okay? That's 600 trades, it's one tick, that's $6,000. That's if you're trading one lot. Say you're trading a 5 lot, and you know, 6,000 times 5, that's $30,000 a year. You can buy a car for that much. That's a lot of money. I don't care what anyone says. $30,000, you know, you can send your kid to private school. In order flow, you know, so if you can have better stop placement, I don't want to say tighter stop, but better stop placement based on what information the market is telling you. So again, you know, say, you know, this is your low here, right? There's a lot of reasons to be buying here in the order flow, okay? You got the big delta increase here. You know, you got signs of price support down here, and you're starting to rally. You know, you got the higher point of controls. So, you know, there's signs here that, you know, you should be buying here. So say you're getting long here in this third bar off the low here, okay? So where are you going to place your stop? What's a better place to place your stop? Most people would place it below point A, which is below the swing low. Well, the better place to be placing it is, you know, at the point of control of the bar on the swing low. That's going to save you 5 ticks. Say this market just falls over here. Where would you rather get stopped out here? You know, 12.5, you know, 519, or 12, you know, 516. You're saving five ticks right there. This is this morning in the DAX, right? You know, you have better stop placement based on areas of support or resistance based on the order flow. You know, this is market-generated information at its finest. This is E-minis. This is a 4-range chart in the E-minis. Okay, so you rally up towards the high, you make a new high, you start coming off, you got a stack selling imbalance here, which is bearish, okay? Anytime you have a solid reason to be selling off a high, you should seriously consider it. Again, I'm not trying to pick a high, but if, you know what, if the market tells me, hey, you've got aggressive sellers coming in here, you know, I'll take that as a sign to get short. You know, that's a very successful trade. You know, it's got a high percentage trade. And there's no way to say it. You know, if you hit a high and you got aggressive selling coming in, chances are you're going to go lower, not going to go higher. So where would you place your stop? You know, most people would place their stop right above the high of the day. Okay, well, why? You know, that's an arbitrary point. You know, most people would be placing it at 24.67 1/4. Really, what you should be placing it behind is the area of aggressive selling. You know, you should be placing it up here at 24.66 1/4. That's going to save you a full point in the S&Ps, right? That's, you know, it's much better. It's a much better risk, you know, best, how to say it, I'm tongue-tied, a much better risk management, you know, money management, stop level. Don't just pick arbitrary places to place your stop. You know, pick places based on what's happening in the market. So, number 3, right? Order flow will keep you on the right side of the market, okay? And what do I mean by being on the right side of the market? You know, when you're in your trade, you gotta make sure you're on the right side of the market. Now, you know, Forex guys, you know, for some reason, I don't know why, I don't know who started it, but the thing that kills me is they like to use, you know, they'll use a 4-hour moving average and a 60-minute moving average and a 15-minute moving average and a 5-minute moving average, and they all got to be pointing in the same direction. My goodness, why not just learn how to read the market when the market's going down, or understand when the market's going up? And order flow can tell you that information. You can see that in the order flow, namely in the delta, right? When you're staring at strong negative deltas, you know the market's going lower because the market's being dominated by sellers. You know, you have one bar in here that's got positive delta. You can see 165, this green spot down here on the bottom. Okay, sometimes you get a bounce. Just because you got one bar with positive delta doesn't mean the entire move is over. You know, if you think it is, give it a bar. Let's see what happens over the next bar or two. Then you can see how aggressive buyers just pile back in. You can see, what do you see on this chart? Mostly red or mostly green? You see predominantly red. You got a lot more selling imbalances than you got a couple buying imbalances spread out here and there, but almost every bar's got a selling imbalance in it. Most every bar's got negative delta. So you know there's absolutely no reason to think that this market's going to go up. I mean, it sounds simple, but you know, sometimes people get excited and see a little bounce like this and they want to get long, saying, hey, I'm going to pick the low, I'm going to be a hero. No, there's absolutely no reason to be buying based on the order flow. Again, it keeps you on the right side of the market. A market that's going up is going to be driven by aggressive buying. And when you got net aggressive buying, you've got positive deltas. On the way up, what happens? On the way down, you got negative deltas. Doesn't get any more simple than that. And you can see how it's going up with green, sort of goes sideways in here and then starts selling off. Now, if you're using, a bunch of moving averages, you're going to get short, way down here. You should be getting short closer up here to when the change is happening, when the market's turning, right? And you can see it up here. You see the positive deltas, and you start going sideways, and then all of a sudden, net aggressive selling takes over. And like I said, you're at a high. Ask yourself, are we going higher, or are we going to turn and go lower? And if you're starting to see net aggressive selling come in terms of negative deltas, what's going to happen? The market's not going to go higher, it's going to go lower. So you can pick it up, you can get in on this move a lot sooner than waiting for 4 different moving averages or whatever to start turning down, right? Or waiting for some MACD or RSI thing to start turning down. No, let the market tell you what's happening. Be on the right side of the market. Another example, this is yesterday in the NASDAQ. Okay, you're starting to work your way down, then you start getting this little bit of a bounce back up, right? You got 3 green candles, 3 up candles, okay? You got some positive deltas, and you get this one bar here. It's red, it's got positive delta, okay? It's kind of mixed. And then here, negative delta, strong negative delta, 200. Do you see any positive deltas of 200 in here? No, you see 26, 83, 94, 179. So all of a sudden, sellers are reappearing. And why is that important? It's because you just come into a swing low here, okay? So people were selling this market down. You get a little bit of a bounce. And if you're a seller, if you're a big trader, you got a lot to sell, right? You just don't come in and bull through the market. No, you work it. You want to get a good average price, right? And I'm not talking about someone trading 5 lots or 10. I'm talking about someone trading 500 lots, 2,000 lots, right? What they do is they start selling. They give the market a chance to breathe. Why should they sell a majority of their order down here when they could take their foot off the gas, let the market come back up, and then hit it again? And that's what you see here. That's what you see happening. And then you start selling off more. So again, say, you get this little rally up here. So you're not convinced here with this one bar with negative delta. Here you got a small delta, but here you got 254. Okay, so the sellers are in control. If you're not convinced by this bar here, you should have your head examined. I mean, it's pretty obvious. So again, if you're using moving averages, by the time everything starts turning down, you're trading down here, at 60 even. But you could pick it up in the order flow, up in here at 60.06, 60.05, before the market starts the big sell-off. So, and you're talking a move from 60.04 all the way down to 59.96, and we even went lower after this move as well. But you're going to catch the turns a lot sooner than later, right? And that's what you want to do as a trader. You want to get in on the moves as soon as you can and get the as much profit as you can out of it, ideally. Now, Order flow will give you an edge over other traders. And people always say you need an edge over other traders to be successful. Well, what's an edge? That's the thing that people don't really get into. They don't tell you what an edge is in the market. I'll tell you, it's speed and it's market information. Okay, and I'll be honest, you're not going to compete on speed. The exchanges charge through the nose for prop firms, for hedge funds to have server space right next to the exchange server. And as a retail trader, you're not going to compete on that because you just it makes no economic sense. You're talking thousands of dollars a month for to sit on a rack right next to the CME server, order matching server. So you can't compete on speed. So forget about that. What you need is better information than other traders. I'm not talking about inside information. No, I'm talking about information that's available that nobody's using, and that's comes back down to order flow chart. The volume footprint chart. And again, if you're looking at a bar chart, you're not seeing this information, right? So here's a perfect example. Again, this is yesterday. This is just yesterday. These are recent examples. Majority are, from yesterday. And you got the swing high here. Okay, this is actually the delta scalper, but I'm not going to talk about that. I'm going to talk about the stack selling imbalance here, where this arrow is. You notice the market sold off a little bit, and it came right back up. Came right back up into that area of the stack selling imbalance. Most people, most armchair technical analysts, they'll up here at this swing high, they'll say that's your resistance area because that's a swing high. Okay, and honestly, lots of times I see these people doing their support and resistance levels, and it just makes no sense. It's because, wow, the market traded there. Well, that's not really a resistance level in the sense I could see the volume. It traded 3 lots up there. I'd hardly call that resistance. If anything, I call that price rejection. But this area in here, where you have the stack selling imbalance, this is true resistance. Why? Because you have aggressive selling at that area. Notice how the market came right back up to that area where you had the aggressive selling. That tells you there's resistance there. And what happens is the market sold off down into new lows. Now that's in the British pound yesterday. But again, this information is out there for traders to use. I don't understand why people don't like using it. Maybe they're scared. Maybe they're intimidated by looking at a chart like this. But honestly, this is terrific information. Order flow, people sometimes think that order flow is the latest fad. It's not. It's actually been around for a long time. It used to be called, watching the tape. You see the old picture of the old man, back in the 20s following the ticker tape. People were paying, hundreds of thousands of dollars to be on the trading floor when there was still open outcry pit trading, because they could see the order flow coming into the market that wasn't put out, by the exchange, that people could look at it on a chart like this now that they can, ever since the home computer became popular in the late 80s, early 90s, that trading software became available for off-the-floor traders to analyze this information. But people, order flow has been around for a long, long time, a lot longer than people realize. And again, this is an example. This is from Friday. This is a great example. This is the information that you're going to get from an order flows chart. Friday, if you remember, we made new highs, but before that, what was a sign that there was strong buying in the market? And it's here on this bar where the arrow is pointing at. You got a strong negative delta, minus 6,000. You got negative 6,000 delta, so you got a ton of sellers, aggressive sellers coming in there. Why isn't the market going down? You got to ask yourself, sometimes what's most important is what doesn't happen in the market when you expect it to happen, right? You have negative delta of 6,000, you expect this market to sell off. Instead, it's telling you that you've got supportive buying in the market. How do you know? Because what you do is you open your eyes and you look at the volume in here, 6,000, 7,000, 1,400 at the bottom parts of these bars. You have a big passive buyer or buyers in the market supporting that market. When you have buyers like that and you can't break through it, that's strong support. I mean, this stuff you see daily, if you watch one market, you may not see it every day, but if you watch, 2 or 3 or 4 markets, you tend to see it daily in different markets. And these are, what I call slam dunk trades, things that are so obvious that, if you don't notice it, you're missing out. And, we went on to make, new highs and go higher. But this was very, very crystal clear for traders to pick up. And I know some that did. So wouldn't it be great if you could find the same trades yourself? Of course it would, that's what you want. So, I developed tools to help traders understand order flow. I mean, you can look at an order flows chart, but like I said, if you don't know what to look at, what's the point? So, one of the things we created was the delta candles, which you see running on the bottom of this chart. Most traders are familiar with candlestick charts, and delta candles are a visual representation of the delta in the bar. And, the brain processes images at a higher speed, much higher speed than it does text or numbers. So, for some people, they could just see what's happening really quick here in the delta without having to even look at the numbers. And it's just easier. Nowadays we're in a visual age. It's all Instagram, Snapchat, Facebook. Everyone's just looking at pictures. So for a lot of people, it's a lot easier to notice what's happening. And even within the delta candles, there are certain patterns of candles that are bullish and bearish. Here you could just see how the delta is changing. We're going higher, but it's decreasing, right? The delta's getting weaker. It's still positive, but it's getting weaker. And then, as you hit the high and you start to turn, you can see it's getting stronger. And what happens is you sell off. So another tool that I created is the Delta Scalper. And again, what it does, it just takes off some of the mental exercises in your brain while you're trading. Because I said, if you're watching one market, it's easy to see as a lot of stuff. But if you're, most people nowadays, have got 4 screens minimum. You can even get a laptop, and you can plug in 2 screens to it generally. And what the Delta Scalper does is it analyzes the delta for you. It gives you buy and sell signals. Some traders, I'm not a big advocate of automated trading, but I do know some of my users have actually turned this Delta Scalper into full-blown trading systems. Okay, my Orderflows trader runs on NinjaTrader, and all these indicators run on NinjaTrader. It's not Bloodhound compatible yet. I'm working on getting that hopefully in the next week or so. It'll be Bloodhound compatible and Blackbird compatible. But it reads the delta for you, so you can concentrate on other things or concentrate on other markets at the same time. Which is what you want to do, right? If you could, I hate to say follow a lot of markets, but I mean, for people that are getting started in order flow, watch one market consistently. But this tool is to help you understand what's going on in the order flow, because I understand for a lot of people, they're not going to pick up the stuff really quick, and having things like the Delta Scalper highlight to you. The way I like to describe these indicators is the slap upside your head. Hey idiot, don't miss this. I designed these things for my own use, actually. Then people are saying, hey, can you share that? Because I was showing it in my videos and in my trading room before, and people say, hey, I like that. Can I get that? I said it was just something to help me in my trading, and that's how it evolved. Like I said, honestly, I didn't start out Orderflows, as a software company. That's not what I want to do, but I did it because the software that was out there didn't do what I wanted it to do. I mean, it's one thing to have a footprint chart, right? You can get a footprint chart for nothing out there, $100 or whatever, and in some cases free. But if you don't know what you're looking at, then what's the point, right? And there's no point in using order flow if you don't know what to look for. So hopefully by now you'll agree that this has been time well spent, right? And honestly, it's not possible to cover everything you need to know about order flow in one webinar, even if we have all day to do this. And how do I know? I could say that unequivocally because I created a trading course on order flow, and my original plan was to make it so you could complete it in a Saturday afternoon or a Sunday afternoon. But by the time I finished recording, all the videos, it turned out to be 15 hours. So it's a weekend, honestly. People say, oh my gosh, I don't have 15 hours to learn this. Oh, you don't have to. It takes 15 hours. I mean, you can learn it a lot sooner. But if you want to go through that trading course, it is 15 hours. It's really, beginning, to really cover everything you need to know about order flow. And so that's how I know. I can say, you can't learn everything in one little short webinar. And Today I'm going to give you a special offer so you get everything you need to get started with Orderflow. And if you act fast, I'm going to give you a very special deal. Okay, it's only because of investor inspiration. And I know old habits die hard. You know, I know people are stuck in their trading ways saying, oh, this is how I trade. I don't want to change. Okay, well, you know, maybe you could add order flow into it. You know, you don't have to become a full-blown order flow trader, but if you could add bits and pieces of order flow to it to refine your trades, to take better entries, or pass on trades, or find better stop placements, then it's going to be worth it. Okay, I'm not saying you got to change the way you're trading. Say you're already good at trading. I know I've worked with a lot of traders that are already successful in trading. They still want to refine their trading, become a little bit better. They're not saying they got to change everything. No, they could work order flow into it. Then they're much happier, with their trading, because their stress level goes down, and there's, I don't want to say profits, but their success rates go up. So you're gonna be thrilled to know what I put together for you. I put together what I call the complete Orderflows trader package. I call this the I'm all in package. And what it includes is the Orderflows trader software, which is the volume footprint chart that I show you, all the charts in this presentation. The Delta scalper, which I just talked about, and the Delta candles, I also will throw that in. And also access to the trading course. So you can, even if you got a complete neophyte to order flow, you can take the course, go through the course, and understand what's going on, and begin trading with the order flow, at least watching the markets. I'm not saying you take the course and you start trading with real money. Watch the markets, understand what you're looking at first, and then then go for it. So what you're going to get is the Orderflows Trader software package, which I normally sell for $8.99. Access to the course, which is $297, the Delta scalper, which is $299, and the Delta scalper, the Delta candles indicator, which is $200, right? I don't even sell the Delta candles anymore. Okay, it's something that's it's more of a proprietary thing that I really just give to people that want to use it. So who does this work for? Zia this guy, he took that E-mini trade that I just explained earlier with the 6K negative delta on supported buying. On Facebook, Sheila writes, thanks for introducing me to the beauty of order flow. The Orderflows trader software is remarkably helpful. I can clearly see now what is really happening in the market. Okay, like for example, who's in control of the market on a very specific time and who's getting weaker as well. So, honestly, I had two choices when I started up Orderflows. I could do nothing. I could just keep the software for myself, the information to myself, period. Or I could share my knowledge with trading world so other traders can make a breakthrough in their trading, become successful. Honestly, seeing these comments, getting the emails from users telling me, hey, this is great, I've taken profitable trades, I'm happy, that makes me happy. That's why I do it. That's what keeps me going. More comments. Fred, this has been very helpful, lots of detailed information, the best order flows analysis yet. Ipso Dub was sad that I closed my trading room. It says people don't understand the value of my experience and what I got to teach. They're bent. So again, the value of all this is $16.95. But again, for investor inspiration people, I'm going to also throw in another bonus, my indicator suite. It's 3 indicators. Normally I sell these for $650. If I get emails from people that bought it saying, hey, you know what, I want your deal. So that boosts it up to over $2,000 for this deal. So if all it did was just, help you manage your risk by knowing when a trade is bad, help you understand what's happening in the market, find maybe just one trade a day, would it be worth it? You got to ask yourself that question. This is why people are paying me over $2,000 for all these pieces separately. However, because of investor inspiration, you can get started now for just $9.99. It's just a one-time payment. I don't charge you monthly or anything like that. I'm not going to go in and say, hey, next month you got to pay me $500 or something. No, that's it. Period. $9.99. Just go to orderflows.com and /all-in, and you can see it right there, right? And as a special bonus, right? A special bonus, I'll give you my top trade setups, right? Again, you could have the best trading software, but if you don't know what to look for, what's the point? These are trading setups. Normally, I only share with people I mentor, because I want them to understand and know what to look for in the market. And so I'm going to give that to you, so you know what to look for. So, after you get everything set up on your computer, start watching the markets, you can look for these trade setups and hopefully take them. Get used to seeing them, used to identifying them, and take good trades. That's what it's all about. So again, get started. Just go to orderflows.com/all-in. It'll take you to this page. Just scroll down to the bottom of the page, and click the button, I'm all in. So you basically got two choices, right? You could do nothing, and in a year from now, come back thinking, hey, maybe I'll look at order flow again. And meantime, piss away your money trading, losing money and just buying more stuff. Or you can invest a small sum. It's actually tiny compared to what you get in return, and go for it, right? You got to take action in life. Whether you want to be successful in anything, you got to do it. So ask yourself, is it worth taking time to check it out? I said, even if it did half of what I claimed, you'll find that it's going to pay for itself over and over and over again. So again, everything, the Orderflow Trader software package, the trading course, the Delta scalper, the Delta candles, the Valtos indicators, the trade setups. You add all that up, it's almost $3,000, but you're going to get it for just $9.99. So if you don't sign up, what's going to happen? You're just going to keep losing money trading. You're going to waste more time and money trying to get it. Get it means understand the market, and you'll probably just give up trading in the end. If that's what you want to do, okay. I mean, I can't put a gun to your head. So early on, I said, if you stuck around to the end, it's the end now, and you want access to my book on order flow, go to send me an email, mike@orderflows.com, with the subject line, send me your book, and I'll pop it back in there for you. So thanks, Renee, and I'll throw it back to you. Again, if anybody's interested, you just go to orderflows.com/all-in.